I'm not a huge networker. It's just not who I am. Like look, I like people, but I'm not the most social person. And you really got to be, if you're going to thrive, I think as a broker, you really got to have that level of like sort of social bent to you. And I don't think I have it. So it wasn't until, the Quickli idea where it's software, you're not dealing with the stress of customers about to lose their deposit on a daily basis and the battle with banks and the battle with solicitors.
It's a grind.
It is such a grind. So the moment, like some tech play came into the scene for me, I was all in.
Loan Options, and today I've got a very special guest. Most of you might already know this guy, but I'm here today with...
Eric Dill here from Quickli, as I think many of you might know me from that by now.
Yeah, well, I think most people from the sort of our space, our industry, would know you as Eric from Quickli, but today we want to, I guess, dig a little bit deeper and understand who Eric is as the person, and I guess want you to take us on this the journey that your career has been. You know, how you first got into running your own business and what eventually led to Quickli. But let's rewind all the way back and let's hear it from you.
Yeah, sweet. Cool, man. Thanks for having me on. This is gonna be really cool. The backstory here, where to begin? Well, as you can probably tell, I'm American, so I didn't grow up here and came here in 2010. Not for finance, not for tech. Came here to study in a school, technically like a leadership college. Did that right off the back of getting my bachelor's in naval architecture and marine engineering.
Yeah, wow.
So it's safe to say at that point in time, it was all up in the air. You know, I had no idea what I was doing, no idea what I wanted to do. I had a fancy degree in boat building that I didn't really have an interest in using at the time. I did some internships in that space and realized that corporate kind of drudge of a career just wasn't going to be for me. And moved out to Sydney and dabbled in some finance, mortgage broking companies there. Learned a lot, enjoyed what I was doing, saw an opportunity to honestly make some money, and was like, that's what I'm here for. I want to make some money. I want to do some things in my own right and sort of lay claim to something that I'm proud of. So I got into, actually worked for Connective for a little bit, as you know, but was able to go out on my own shortly after that and start a mortgage broking business. And man, there's a lot we can go into here, but the mortgage broking space is fun. It's hard, especially for, I'm sure there's many people who don't have a network when they're in this city. That was probably what stood out to me from the outset. Was I'm getting into a business where, there's no family to tap into. There's no, childhood friends that I've grown up with that are still around here. There's no professional network that I've done life with people out here. So starting a business from fresh was, definitely introduced its challenges. But that was all back in 2014 when that launched. And I'd say by like 2020, COVID era, was when the idea for Quickli came around. And the rest is history from there. I mean, we can get more into that if you want.
Yeah. I'd love to unpack it. The thing that stood out right then and there is just how you said you had no network, no... So when you first started in the space, what are the key things that you learned, and then what was the catalyst for making you say, I can do this by myself now? Yeah. Because it's like, in a country that's not your home country, or at least not where you grew up, like we happily welcome you to this country. You're one of us now. But, it's scary. And, we sort of went through a similar thing when we launched in New Zealand. It's like, I have no network here, and like it is pretty scary. But I think once you have a formula for success and you kind of have paved the way, it's easier to do it the second time around. But doing this for the first time is,
Yeah, I think it has a lot to do with some, I don't know where I get it from, but there's some optimism there that it's like, what's the worst that can happen? You try stuff. I think that's the story for many of us who find ourselves starting several different businesses is you kind of have to go into it with a certain level of innocent ignorance where you're like, okay, I'm better off just trying this. I'll lose sleep at night if I don't try this, and I'm just going to give it a crack. And thought, worst case is I've got to go back to the corporate world. I think it's interesting how easy it is for us to sometimes delay doing stuff because you're analyzing the risk or whatever could go wrong, and you're thinking about failure before you've even started, and it's like, well, that's not going to get you where you want to go. So I think it was definitely an intense amount of optimism that you figure it out, you just work hard enough, you'll get it done. But without a network, you find yourself doing a slow grind. It's a slow burn for a while. You're doing everything you can to drum up business. You're speaking to agents and accountants and doing all the things and attending all the events. But it worked out all right. But I'm not going to pretend it was easy. Like there was a lot of dark days in the beginning, wondering if this was the right call.
Can you tell me about a specific period where you were like, I don't know if I made the right call? And then I want to ask this. The follow up question will be, when was the time where you're like, I made the right call?
Made the right call. There was definitely a season where like the volatility of commission, probably like 2 years in, I had a really good accounting partnership straight out the gates, which definitely set me up for a win. It was like, okay, I don't even know what it's like to not settle loans on month one. It was like, okay, this is just going to be cruisy because I've at least got an accounting partnership. And they were sending through a lot of business, but probably by year two, at the end of year two, the accountant hits me up and says, hey, look, we hired someone in-house. We're just going to handle it all in-house. And it dawned on me how reliant I was on that relationship. So that was an eye-opener to definitely don't put all your eggs in one basket. So that dried up, really fast. And I think that kind of took the wind out of my sails. So by year two, commission just started to plummet. Settlement volumes, that is. So I was looking at that thinking, got to get back in the game, got to go hustle and find more relationships, got to go cold calling every single person I've ever gotten as a lead from anywhere, and just start tapping back into that. Then it wasn't honestly until 2020 where it was like, okay, this is all worth it. And that was because the Quickli idea came about. Like, brokering's been good to me, but it was never really something that I thought I thrived in. I'm not a huge networker. It's just not who I am. Like I like people, but I'm not the most social person. And you really got to be, if you're going to thrive, I think as a broker, you really got to have that level of sort of social bent to you. And I don't think I have it. So it wasn't until, the Quickli idea where it's software, you're not dealing with the stress of customers about to lose their deposit on a daily basis and the battle with banks and the battle with solicitors.
It's a grind.
It is such a grind. So the moment, like some tech play came into the scene for me, I was all in,
And initially, were your thoughts straight away, this is a mass market play, or was it, we want to build this for ourselves? And then sort of eventually the idea was like, actually everybody could benefit from this. Yeah,
this was, if all else failed, this was for me and for my brokerage. It was like, if people don't like it, I at least know I'll use it internally. And fortunately though, many people did like what we were pitching them and it worked out all right. But this wasn't, the intent was never to really make something that changed the industry or changed how brokers operate. I think best case scenario for us was we'd get a few brokers to dabble and use it and enjoy it.
And by a few, you mean half of the market now, right? Or a bit more than half of the market.
I don't know. Depending on which association you talk to, I think we're at around just under 12,000 users now.
Wow, that's amazing. And, look, this is a great story of like product market fit as well, because the thing is, if you talk to a lot of brokers and you ask them what pre-Quickli and post-Quickli, what they spend most of their time on, workshopping and finding a solution, it was always that you'd hear people complaining about the serviceability calculators and trying to find the right solution, because it's different in a sense to asset finance, where asset finance is serviceability is obviously prevalent, like it's a big part of the process, but it's more credit policy. And in mortgage broking, it's more serviceability than it is credit policy, because many lenders have very similar. And there's obviously nuances in that too. I'm just making a generalization there, but most mortgage brokers would have said serviceability, like it's the bane of my existence. And then you come out with this product, and the adoption's just nuts. So tell us about that. Like, tell us about the moment you knew Quickli was actually a mass market play.
Yeah, I think when we went into it not knowing if we could perfectly replicate serviceability calculators, I think, as you know, many of the aggregators have a tool similar to this, and so in that sense, it's not really even a novel idea. We just saw that there are other versions of this that kind of left a little bit to be desired. I looked at it and thought it's probably for a reason, like the fact that they haven't been able to perfectly build these tools must be because it's not possible.
Yep.
So I hit up Angus, who was a good mate at the time. I pitched him the problem. I said, hey, look, this thing kind of already exists, but no one uses it because we don't know where the accuracy starts and where it stops. So you're not going to use it at all if you don't know which of those answers are the wrong answers. So I pitched to him that problem and said, let's just have a crack at seeing if we can perfectly replicate a few of these spreadsheets and all of their nuances and all of their flaws and their intricacies. Let's just see if we can nail it. And that took probably a couple of months. But that was on a platform that was usable by me and by anyone else that we just gave access to it. So once we knew that we couldn't find any flaws in the results, then I think I hit up, I don't know if I can say this, but public email addresses on like Smartline and Mortgage Choice's website. And I just started individually emailing each one of them with a cold email saying, hey, like, you probably think this is too good to be true, but just play around for yourself and let us know what you think. And honestly, it was only a couple of months before word just spread on its own from there, like wildfire.
There was definitely a virality. And I'm not just saying this because you guys know I'm a fan of your work. But I think that at some point it needs to be studied how viral this product was, because you guys didn't have a massive marketing budget. You didn't have like a,
what's a marketing budget?
Yeah, exactly. And like, to get this level of adoption in a software product, I think if you spoke to most SaaS founders and said, hey, you could get 50 to 60% market share, they'd be lining up out the door. But that's speaking to knowing the problem really well. And the point I want to make here is that aggregators and lenders and other people, just pure tech companies that have no finance background, are the wrong companies to be building technology for our industry. And I say that with not to insult them. The best people, the people who are most well positioned to build technology for our industry, are the brokers. And the reason is, the further away you are from the customer problem, the harder it is for you to understand those problems. So if you're the broker, you're dealing directly with the client, you're dealing directly with the lender, you're dealing directly with the aggregator. You're in the middle of all of those problems that you need to solve. If you're the aggregator, you're too far removed from the solving the client's problems and pain points. If you're the lender, you're way too far removed, because we know 75% of all mortgages now are originated through brokers, and that seems to be growing. And COVID probably accelerated that, with all these rising interest rates accelerated that, because now servicing buffers are like, it's just now like your product has a whole bunch of things that kind of went into making it more viral. But the execution is the part that's really important. If you build something, and even if it's just one small aspect of the process, but you're the very best at it, then people will use your product and you will get adoption. And of course, it's very reasonably priced. I think if you're a mortgage broker and you look at how much Quickli costs versus, like, the return on that is insane. And like, I just think at some point that your business should be a case study for SaaS founders. And so if anyone wants to do that, I think you should hit these guys up. But so obviously you guys reach a certain point, and the business is doing very well, and you've got all this market share. But what's sort of some of the more recent things? Because I know that you guys are sort of continuing to solve other pain points for brokers.
Yeah. Look, we had, like you said, a kind of a tremendous lucky story of the ideal product-led growth, where
Yeah, delete the word lucky. I think knowing you guys, there's no luck
look,
to it, right?
I have to believe that there were dozens of other brokers before me who saw the same problem. So it's like, I don't know, someone eventually was going to come along and just take some action, and
Yeah.
that was just lucky enough to be me. And honestly, Angus, he's a 10 out of 10 engineer, so I definitely picked the right guy to come in and attack what it truly is a very complicated problem to solve. And we managed to, I think, solve the problem that exists most broadly across the broker industry, right? Because it's easy to solve problems that, are a pain point for a few people or a small percentage or a minority of the group, but we just so happen to solve a problem that if you're a living, breathing broker, then you don't get to avoid serviceability headaches. I mean, it's just a part of your day-to-day.
Yeah.
So fortunately, that entire market was someone suffering from this problem. And we, now being at what we believe to be close to the ceiling of that TAM, for the last year or two, have been looking at other ways that we can continue to add value to that flow, that broker journey or that customer journey. And you kind of look at what we've done, and we've focused on what we call core Quickli, which is the serviceability piece. And then we started bolting on things like the funds position and the product comparison and a few other useful calculators in the mix. And then we looked for ways to go deeper into policy logic, so handling year-to-date calculators that are specific to each lender, because I know a year-to-date calculator sounds like it should be a standardized tool with the same result for all lenders, but that is simply not the case. Each lender almost has their own way of calculating a year-to-date figure.
Yeah, and they sensitize. So like even on the asset finance side, they'll have a procedure where they say, okay, they'll take the lower of
Exactly.
or the lower of year to date or the pay cycle, or they'll say we'll take the average of the two pay cycles, or there'll be something where there's overtime and commissions or bonuses, and they'll sensitize that part of it. And so it's definitely a pain in the ass.
Yeah.
And your point about accuracy, I think that's the part people have come to trust the product and the service.
Yeah.
But unless you put that extra effort in to understand all the little nuances that lend the policy.
Exactly.
And that's why tech companies who don't necessarily have a background in finance or don't necessarily understand the pain points or the problems they're trying to solve properly aren't going to be as successful as someone who's like,
Because it's easy to get 90% of the way there, especially with these calculators, where fundamentally they're all kind of doing the same calculation. So you spend what might not be that much time getting 90% accuracy, and you kind of think, oh, close enough is good enough, and you kind of move on to the next one. But we've learned after building 40 odd of these lender calculators that the real heavy lifting happens in that final 10%, where you're just handling every little. I mean, some of these calculators that we're working with, they actually have bugs inside the calculator that we discover. And in the early days when we weren't communicating with lenders, we replicated those bugs just to make sure our results matched the lender's results. And then if we had the chance, then we'd find someone at that bank to email and say, hey, I don't think your team knows this, but you're ignoring an entire HEM category, and it's wildly impacting the results in a positive way for the customer. And I'm almost certain your team doesn't know about this. So we've been able to discover a lot of those little details that, are quite frankly like buried in these spreadsheets.
That's a good point, because now if we switch gears a little bit and understand like what problems are you solving for the lenders and banks?
Yeah.
So like just off the top of my head, I think like higher submission to approval rates would be a byproduct of that.
Yeah. That's where I wish we had more data on that too, because that is one of the selling points to lenders when we're talking to them about why they should work with us, while being on Quickli's panel. There's a relationship here that we can both benefit from. And I have to believe one of those is the quality of the lodgement must be increasing, right? Because, human error we're all prone to data entry errors. And that's what you're doing when you're filling out these things manually. But on Quickli, it's automated. Like we have a literal engine filling these things out for you. So, you remove the human error element. And that must be leading to better quality lodgements across all these banks.
Oh, absolutely.
But we don't have that data on that yet.
Yeah, it's tricky. It is hard to get that feedback loop from institutions. But I do think the right way is to have open dialogue with them and kind of even create one unique case study, or because once you've got a case study and people can say, well, after we added Quickli, or after we sort of built our policy stuff into Quickli with the Quickli team, we saw an improvement across submissions to approval rate of, it was 50% submission to approval rate. Now it's 60, 70%, whatever that number is.
Yeah.
And what does that translate to as an efficiency? Like if you could attribute a dollar value to that efficiency, I think it's massive.
I mean, every day, multiple times a day, we're getting people submitting us what we call discrepancy reports, where it's a button front and center where they're meant to tell us if they see something wrong that we've done wrong. So we don't hide behind any of that. And without fail, almost every single time, it is something that is somewhat misleading by the bank's policy or the way the calculator is behaving when they open up the spreadsheet. And often it's a situation where the broker will say, hey, this lender's calculator is actually saying I can't borrow as much as Quickli is saying I can borrow. And we're like, yeah, okay, let's take a look. We investigate happily, but 99% of the time what we end up showing them is Quickli had it right all along. It's just there was a few buttons that you missed or a few fields that you were meant to check on. And often that means what it tells me is, wow, this broker without Quickli could have submitted this deal to that lender under the impression of, let's say, $1 million borrowing amount, when this bank was never going to approve $1 million if they had just filled out or understood the calculator better or understood the policy better. And it was doomed from the start, and perhaps that lender was only ever going to approve $800,000 had they known in advance. So I think Quickli is actually salvaging a lot of deals where lenders or brokers are finding out where they can place it, or inversely, it's salvaging the reputation of some brokers by not lodging applications where they really shouldn't be going in the first place.
Yeah, it's a good point. And just a quick funny story. Obviously, we were initially planning to play golf this evening, and
would have been good. Turns out that's not good on Valentine's.
I think one of my goals. Someone asked me this year what he goals for this year, and I have obviously have proper goals set out. I'm one of those very organized people. But and I was doing my personal ones. I was yeah, this is not the year I'm getting a divorce. So I'm going to make sure I scale back some of the work travel that I've got planned and all this kind of stuff. And then when you sent that thing and you're hey, I know we were going to play Twilight Golf, but it's Valentine's Day that we're recording this, and we're on a date if people don't know.
Yeah.
we're going to have candlelit dinner.
I traveled halfway around the world, left my wife and 3 kids just so I can be here with you on Valentine's Day. What a friend.
Oh, shit. But yeah, so we will get to play golf, and looking forward to that. Do you play regularly, or? Man,
don't put me on the spot here. Let's not talk about my golf game. It's pretty bad. No, I do try to play, let's say, once a week. Yep. I'm so bad that I knew that. So people had always warned me, once you go get golf lessons, then you just be prepared to get worse before you get better.
Oh, I'm going to tell you a story about that.
And Keep going. This is a good time for me because I'm certain I can't get any worse. So I started my golf lessons out, at my worst. And I'm 2 lessons in and I'm loving it. This guy's already fixed some really important bad mechanics. But yeah, I play maybe once a week for the last few months.
Yeah, amazing. Yeah. Once a week is good, man. I think if you spoke to most blokes that have a business and have a family and
there's a reason for this. Because I work the Australian hours in the US.
Oh, yes.
So I'm working 6 p.m. to 2 a.m. every day.
Oh, so your days are pretty.
I got my days open. Yeah. Kids in school and daycare and stuff. But yeah, I get released to go play.
That's amazing. I envy my brothers. Both my brothers are in construction. One of them's got a concrete truck and one of them's a builder. And they'll have a day where they're on site, they do what they need to do, they'll be done by midday, they're on the golf course hey, are you coming? I'm I don't work part-time you guys. But every now and again I try, when they can give me enough notice, when they have their stuff pre-planned at least a week in advance, I'll try and block out my calendar and go and play. But I've been playing nearly every Sunday for a little while now. Right. And man, I love it. I golf is one of those things where It's good for the soul. Like you're just around, there's banter, you're around your brothers or your mates or whoever you're playing with, even business associates, colleagues.
Yeah.
And it's just a nice way to be in nature and not stare at your phone and
It's
not
true.
stress about work emails and what's going on at the office. And it's,
I mean, I feel like you do have to be a sucker for pain to want to put yourself through a round of golf.
So let me tell you this story. So I'm getting into golf. I probably started around this time 2 years ago. So like I've been playing now for 2 years, and first 6 months, obviously I was horrible. I was improving quickly, but pardon the pun. But I sucked. I was like pretty bad. I was scoring like 110, 120. Like I sucked.
That's my domain.
Yeah. And so I started to get better, and then I was like, you know what, the right thing to do now before I develop too many bad habits is that, like, about 6 months ago, I said, I'm going to go get lessons. So I go and get lessons. The first lesson I got, my game improved so much, so much. And I was like, because
Trouble.
My younger brother is, he's currently the best one out of us. He plays maybe not the most. I think my older brother plays the most. He's like full on degenerate. My younger brother's a degenerate too for it. But I think my older brother plays a little bit more than my younger brother. But my younger brother's, his swing and everything is like really consistent, and he doesn't, he's almost got like a John Rahm swing, like it's like a half swing,
right?
Because it's a half swing, and because he's a pretty athletic guy, he can still generate like pretty good power.
Yeah.
But because it's only a half swing, it's like,
I hate those people.
It's accurate.
It's so good.
He'll just hit like a drive will go 200 meters, but it will be dead straight.
Yeah.
And then he'll hit like,
it ain't right.
yeah, it's just like, anyway, so he's really hard to beat. And I've beat him obviously quite a few times, but like he's hard to beat. You've got to be playing your best, and he's got to be like off the pace a little bit that day, and then you'll get him.
Yeah.
And like the last 4 or 5 times we've played, I've been within 2 strokes, 3 strokes as him. So I'm like, I'm catching him slowly, but I started winning a lot. And we have like, between our group, we have this belt that we put up on the top.
So good.
Just because we're, it's like
of course
funny
you
thing
do.
to do.
Yeah.
As blokes do, we create silly prizes for.
It wouldn't be fun without it.
No. Yeah, I know. And so I go and get this first lesson, and I start like wiping the floor with everybody, and I'm like, that's it. I play, when we did a calculation, I play on average a quarter of the amount they play, but I was already beating them, and they weren't happy about that. Anyway, so I'm like, wait till you see my second, third golf lesson. You guys are in trouble. I get my second golf lesson, and for some reason, every single game after that,
terrible.
up until about a month ago, I went substantially backwards. So, like when I say substantially backwards, I actually made a bet with my brothers. I was like, I'll never score over 100 again. That's it. It's not happening. And they're like, oh, well, let's see about that. Like if you lose, you'll have to like shave your head. I was like, all right, I'll shave my head to a 2. And then like within a week or 2, I scored over 100. And I was like, what the fuck is going on? What the fuck is going on? Anyway, so I swore I'm never getting another golf lesson again.
Yeah.
What did he do?
Dude, I hear that story so much about golf lessons. Just wrecking people's game.
Every single time you hear it. And when I went there, I was like, I literally told the guy, I was like, hey man, like, don't try and rebuild me. Just give me a few pointers that can like fix my game.
Yeah.
And
I reckon he did it on purpose.
Yeah. Well, the first one, I was like, man, I'm going to be the person who breaks this stereotype of golf lessons ruining people's game. And the second lesson I got, like in the room, in the simulator room that we were practicing on, I was hitting all the shots beautifully. It wasn't until I got back out on the course that everything just fell to shit. And I was like, I'm doing everything like exactly as I was shown.
Yeah.
But anyway, the things that I've found has helped my golf game is actually spending some time at those indoor golf places like Big Swing and things like that, where you can see the club path and you can see the impact point and you can see which shots like go where and stuff like that. Because you can also like teach yourself a little bit like, okay, I'm coming down too steep on it, which is causing it to slice, or my club path is like too far in to out, so it's creating the draw.
Yeah.
But if you if you're changing your grip and you're changing all this stuff and you're changing your stance and you're doing like too much, it just becomes overwhelming.
That's what I think most people end up. Yeah, they're trying to change too much too fast, and you can't really isolate what the real problem might be.
One thing that really helped me as well is when I had a good session at a driving range or at an indoor place, I wrote down exactly what I was doing. So if I ever am having trouble hitting a club, let's say for example, sometimes, like once upon a time, my driver was the best club in the bag. I'd hit amazing drives and they were pretty straight. I was hitting like a lot of fairways, and I was like, this is a really good weapon in the bag. And then so I wrote down what I was doing, and then there was a period where it was the worst thing. I was like, I'm not going to be one of those guys who like hits off the tee with an iron. I can't do that. And I was like, what am I doing wrong? And I got somebody to record my swing, and then I compared that to what I'd written down when I was hitting it really good. And I was like, I knew exactly what I was doing. I was hitting these big hooks, and I was watching how the club takeaway was like inside all the way back.
Right.
And in the where I'd written down in my Apple Notes, it was like I almost need to drag the club directly straight back. And that gives me the right arc to then come in and hit. But just reading that, the next time, literally after seeing that and looking at the video, the next time I went, I focused on that one thing and it was fixed. I was like, all right, so now when you're in a good spot with your golf game, make sure you're making notes, write them down of exactly where is the ball? Is it in the middle of your stance? Is it forward stance? Is it whatever? When you take the club back, what does it feel like? Does it feel like you're taking it back and in? Does it feel like you're taking it back and out? Does it feel like you're taking it straight back? Just all those things. How far the ball is on the club face. Like if you find yourself hitting too far, or you're hitting the hosel or something like that, well then you're too close to the ball, and like the ball should be further along on the club. It's just like writing all these things down.
Yeah, you know? I mean, golf is wild for this. You know, the level of precision required. I don't think any other game, any other sport in the world requires the level of precision to be halfway decent at the sport. You know what I mean?
And like 1 degree of club face difference is the difference between you
if
being
you have
in the
like
water.
a sore trap muscle, it's going to change the mechanics of a backswing, which your game's gone. You know, like everything changes.
Golf is the only game that nobody can be naturally good at as well. Like you could get somebody who's super athletic and throw them a basketball, and like within 10 minutes they're going to be able to hit some buckets. You know what I mean? Like they're not going to be LeBron James. Obviously, there's levels, but you know, football, anything else, you could give somebody a soccer ball and just be like, give them 10 shots at goal, and I promise you, by 10 shots, they're hitting it like pretty close to the top corner. It's not that difficult, right? Golf is like, it's almost like sometimes you can practice too much. You just go backwards. That
was my first impression of these simulators. I have a buddy who spent, I don't know, I'll shame him, I think it was like $70K on a simulator. And this is a long time ago, but he's really good at golf. I mean, he was like scratch golfer for a while, so like amateur pro. And he gets one of these things in his house, and within a month, his game took a absolute reverse and started going up into like high 80s again. He quit golf for like a year because this machine was forcing him to go way too technical, like, you know, into all the numbers, the angles, the club face angles, club path. Like you can get like analysis paralysis on this stuff, and just it wrecked his game. So he ended up like having to get rid of the simulator because it wasn't doing him any good. But he eventually, like golf, the moral of the story is golf will always find a way to humble you. Like as soon as you think you're really good, it will find a way.
It's too true, man. It's like, it's literally the only sport that nobody can be automatically good at, because it's so unintuitive as well, the swing and everything. It's not like, I don't know, it's just so different.
Especially for me, and I guess I don't think I wouldn't have appreciated how different until the golf lessons. The guy was like, "You've played baseball your whole life, didn't you?" I'm like, "Yep, okay. What did you just see in my swing? Let's talk. Like, tell me why you just spotted that." And he rattled off like 4 or 5 things that like specifically baseball players do when swinging a golf club. And he's like, "Yeah, we're gonna have our work cut out for us." I was like, "Oh, this can't be good," because there's a lot of habits now to break.
Tennis players are the same. You often find tennis players, because of the forehand, they'll hit a lot of shots with draws, whereas somebody who's never played golf before, there's a 9 out of 10 chance that they're going to hit slices, you know. But tennis players, as soon as you see somebody who's never played golf before and the first shot they hit is a big draw or a big hook, you're like, okay, that's the forehand because they roll the
Yeah, it makes sense.
and they close the club face.
Yeah.
And the path of a forehand, if people think about tennis, it's very much in to out, and that's literally going to hit a draw.
Man,
So
how cool would a Quickli and Loan Options golf event co-op be, dude?
done, signed
Let's do
up,
it.
let's go. We spoke about doing a lenders versus brokers golf day last year. We had too much other things going on,
Yeah.
but
You guys stay busy.
yeah,
You do a lot.
but I would love to do that. We did the NRL golf day, and man, that was such a fun thing, man. We had so much fun. That was the best golf day I've ever been a part of. It was like Loan Options basically set up like a live golf party hole style thing where we had a DJ and
So good.
we had purple vodka cruisers and like all this kind of shit. It was just like purple everything. But there was all the NRL players as well, and they were in squads, and man, that was so much fun. So yeah, if you're keen, we could definitely sign up a whole bunch of brokers and a whole bunch of bankers.
I mean,
and lenders.
I'd almost pay money to see Angus out there on the golf course swinging a club.
Does he play as well? Or no?
Nah, he doesn't. There's two other guys in Quickli and Promptly. So we have another business that we spun up, but it's called Promptly. And with the whole crew, we all just went to Philippines.
Yeah, I saw that.
And yeah, it turns out, these two other guys play. So we had a really fun round in the Philippines, which actually, like, I wasn't falling out of love with golf. Don't get me wrong, I love golf, but something about the Philippines round just like amplified it even more.
Yeah, wow.
Because in New Orleans, it's all flat ground. It's just boring flat ground, nothing beautiful about it. It's just as basic as a golf course can get. And that's what I've gotten used to. It's fine. But like out in the Philippines, it's the elevation, the kind of jungle vibes along the ocean, everything about it was perfect. And I was like, man, this is what golf is about. Like I can almost see myself making it like a strong effort everywhere I go now to at least find a round of golf to play.
Man, I love that. So I'm part of a golfing group called Imagine Golf. It's a business networking and golf thing.
Of course you are. It's awesome.
But man, you get to play all the best courses, right?
Yeah.
And so when I played New South Wales, I was like, man, no wonder why this is like one of the top rated courses in the country. Like we were playing and it was like, not quite, it was afternoon. So the sun was sort of not ready to set, but it was close. And you're walking up this massive incline and then you get to the top and it's literally the Pacific Ocean. Like and there's like waves crashing against these big rocks. And you are so high at that point, and like you're so overwhelmed with how beautiful it is. I recorded a video of it, and like whenever everyone says like, oh, which course is on your bucket list, I'm like, at some point you have to play New South Wales. It's beautiful. There's heaps of other really nice courses around here, and there's some really good ones in Melbourne as well. But man, there's something about golf, especially really beautiful courses.
I'm into it, man. Let's make it happen.
Yeah, this sounds good. Well, I think if we got if you actually wanted to do that and we put that together, that would be heaps of fun. We could go somewhere that's a really nice course and breathtaking. Like there's heaps of nice courses. Even if we went like a little bit sort of towards the Central Coast, like Magenta Shores is a beautiful course. Okay. There's so many beautiful ones, and even around Sydney, there's so many good ones. But I'd be keen, man. That'll be heaps of fun.
Let's do it.
Tell me more about Promptly, because I know that for a while you guys were, if I'm not wrong, you're like toying with this idea because like you're looking at what other problems the brokers have, and think like credit decisioning and loan processing is like another one. If you talk to a lot of brokers, that comes up, and everyone has a different way of doing it. Sometimes they hire internal broker support. Sometimes they do offshoring. Sometimes they do. Like there's no one right way. Obviously, it's got to work for your business. But how did you come to that conclusion that was a good business model?
Yeah, it's kind of still in stealth mode. Hey, so I mean, we would probably have to put people on a waiting list if anyone inquires with us right now. So apologies in advance if someone hits us up to check out that service. Because it's kind of tricky to scale. You need a massive back office to really handle volume. But anyway, we saw, this is just anecdotal. We had brokers hitting us up saying, hey, and they were half joking, maybe half not joking, but they would send us a message being like, hey, can you guys just assess the deal for me and just get back to me? Because they saw that our tool like is doing what it's doing, sure, but our support team are all ex-credit analysts. So when a broker sends in a question, we're not just going to say, hey, go speak to your BDM. If we know the answer with a certain level of confidence, then we talk them through the policy and the calculator and point out to things that they may not have noticed about that fine print in that area. So I think enough times brokers have started to see that like our support team are there to like legitimately help. And they just started hitting us up saying like, man, can you, and this is a handful of times, people saying, would you guys be able to like assess a deal for me or like work on this? And we're like, oh, it's not a service we provide, but it definitely planted the seed. And we're thinking, why don't we spin that up? Like we have the ability to scale an offshore team. We've proven that. We know these guys are arguably some of the smartest people in the country when it comes to understanding like 40 different lenders' policy and calculator stuff. So yeah, and it's not, a high risk thing to start. We know that the concept's been proven out time and time again. Yeah. Plenty of brokers are comfortable with outsourcing this type of work to the Philippines specifically. That's where all our team is. And yeah, so we just started hiring one credit analyst at a time, dropped a few emails to a few brokers and was like, hey, like, are you interested? And they were like, yes, please. Where do I sign? And then it's a bit silly. It's another one of those product-led growth stories. Like we've got 12,000 users that in any given moment, we can just drop them a line and say, hey, we now have this new service. Yeah. Are you interested? Yeah. Right. There's no mass marketing effort needed to convince people that like, hey, this might be something you're interested in because they already know what it is.
That goes like right to the sort of the Alex Hormozy approach. He's like, build your community and then you can sell into the community, and any new business you spin up, you're adding value to the community. Yeah. I think that's, that comes with trust, right? Like we know the standards that Quickli set for their servicing tool. So that means that they automatically make the assumption that the standards are going to be as good or better for loan processing services and decisioning or packaging a deal. But yeah, a few people, would ask us like, what do you do for submissions and processing and all that kind of stuff? And I think one of the problems that this solves, correct me if I'm wrong, but I feel like a lot of brokers avoid hiring either full-time or an offshore because like sometimes they won't have the utilization of them. Right. And so if they can just do it on a per application basis, then there's a few ways that I see it. One is they might have already one full-time resource, but it's not quite at the point where they need to hire a second one. And so they can use this service for overflow. Exactly. But they can also use it in place of hiring somebody, and then they don't have to worry about hiring, training, supporting, investing the time to do that. They don't have to worry about if someone leaves them, they have to retrain someone from scratch again. Yep. So I feel like there's all these pain points that brokers would look at it and go, okay, well, it's easy to see why it would be better for me to just outsource this. And if they actually calculate how many applications they do, sort of go through this process, package and support and all the rest of it, versus how much they're paying for the offshore resource and how much it would cost if you guys did it. Exactly. I think they'll probably find a pretty good good value, and not to mention the quality, right? Yeah, and that's it. The economics have to make sense for the broker, and we were intentional about making sure that we can provide a service at a cost to us that make the margins worthwhile, but also make the economics a no-brainer for the broker. So, for example, we may, like if you were to try and hire someone offshore full-time, it may cost $3,000 to $4,000 a month, depending on which agency you go through. Even if you go direct, I don't know, but like let's say that's the ballpark number. That's the equivalent of sending us like 10 of your deals. And if you look at the data, many brokers aren't doing 10 deals a month. So if they're not doing 10 deals a month, but they're going to pay $3,000 to $4,000 a month for that support person, then, a case could be made that they might as well just send their deals to a group like us who can assess them at a fraction of the price, package them up, process them, like submit them through Apply Online for them. And it's only when their volumes start to get, let's say, above that 10 threshold, does it start to make more sense for them to go and hire someone full time. Yeah. Yeah. So we're, not oblivious to the fact that this service isn't going to be for everyone with high volumes. But if you are the type who are looking to run like a lean operation where you don't maybe want the headache of managing someone yourself offshore and finding busy work for them to do, and you like the idea of just sending, it's kind of in a way, I don't mean this in a bad way, but it's kind of transactional. The idea is that we keep
Like we're not providing an employee to you for you to go and manage full time. It's our back office, and you're just sending the deal to us, and then we package it up and send it back to you. And we can lodge it for you as well. But the point is like you don't have to manage anyone, right? You send us the deal, we send you a result, and then we're done.
I think if you speak to a lot of business owners, some of the biggest pain points are managing people.
Exactly.
And personalities, and it's challenging. Like, coming from someone who has basically 38 people in the team, like it's a real challenge, and there's always things that you're dealing with. And the hardest part is making sure that you have consistent processes and all these kind of stuff, but it requires a lot of time investment to set it up properly and to make sure you have the systems in place and that you're going to get a consistent approach. If somebody else is offering that and it's just on a per use basis or whatever the scenario is, I think a lot of brokers will see value in that. Like, okay, I don't need to hire trained support, counsel, because that's what you are sometimes as a business owner, right? You're the counselor. You got to, deal with, all the personal things that come up and what
we're finding, and look, we're probably a bit naive. We should have been prepared for this, but we're finding these brokers are sending us their most complicated deals first to either test.
Why am I not surprised?
It's like, I know it's probably the kind of deal where they're just going to get rid of it if we can't find a solution. So it's definitely testing us, right? We're spending a lot more time on some of these deals than we probably want to, but it's early days. We have a lot to figure out.
Tell me, what about if it comes back, because you guys obviously have like a big panel, right? And some brokers don't have accreditation for that many people. Is there a way for, let's say a broker can't find anything on their panel, they send it to you guys, but you have something on a wider panel, or of a lender that's on a wider panel? How can they handle that situation?
Yeah, look, it's something we try. It's tricky because we started off with saying, hey, we can assess this deal's position across 40 different lenders. How good is that? Like we are the ultimate bid compliant solution. We can truly, but that just took way too much time for us to do. And what we found was brokers, our customers, didn't even value that because they know they're not dealing with many of those lenders for various reasons. They're not on their panel. They're low doc lenders, and this is a vanilla prime deal, whatever. The point is we were spending too much time assessing this deal with lenders that broker had no interest in taking the loan to. So we kind of pulled it back and said, okay, to the broker, you tell us which lenders you do most of your business with, or in the last 12 months where any of your deals went, and we'll just use those lenders as our starting point. So we know you have an appetite for these lenders for these reasons, and we'll kind of base our recommendation looking at those lenders first. But in the common event where your deal doesn't fit with your kind of preferred lender panel, then we'll explore alternatives. And that's where we can kind of open their eyes to say, hey, look, I know you haven't done a deal with my state, but they're actually well suited for this, and here's why. And we could just sell them on why, my state's actually a good win here, and we take it and run with it from there.
Amazing. And I also love the name, obviously. You quickly, promptly,
it
kind of sets up
we got a whole suite of these names stored up.
No, that's really cool. And I'm obviously very, very keen to see what else you guys bring out, because I think you guys do such a great job. And everybody knows I'm a pretty big fan. Even when we won the award, I was like, quickly.
You were such a legend for that, dude. We had such a good laugh. I wasn't there, but they had to show me a video, and I'm like, did he really just say that?
I spoke to Annie after that, and I was like, whoever the judges were, can you please make sure that I wasn't trying to intentionally offend them? I was just, you're not expecting something, and I genuinely was not expecting. I was just happy to be a finalist.
That's why we love you so much, man. That was awesome.
But, sometimes you get caught off guard, and even now I'm kind of blushing thinking about it, but you get up there and you're like, I honestly wasn't expecting this. I know a lot of people say that, but they say, I wasn't expecting this, but here's my pre-prepared speech, So I definitely wasn't expecting it. And then I was just, I'm known to sometimes speak without a filter, and all the time speak without a filter. Sometimes it works out really good, and people like what I say. Sometimes it don't, but at least it's where I stand.
It's so true. And we've always admired you guys. Like you in a way over the years have inspired us to kind of level up on certain areas of marketing and PR and brand appeal and just overall initiative in getting yourself and your brand out there. because that's just not Angus and I's style. Like we've been happily kind of like under the radar for a while, but then in recent events with even Alicia, you know, coming in helping us out, it's just new territory for us to actually have to have a care factor now on like doing stuff like that. But yeah, the awards for us, I'm not kidding. Every single time an award came around, if it were up to me and Angus, we wouldn't have even submitted something. It was just because we had a few staff. You know, I love them for it. They were pushing it, and they submitted that stuff. But yeah, lesson learned. You know, that stuff's important. Like we need to be better at kind of talking about how much we love the industry, how much we want to do for the industry, what other initiatives we have going on for the industry. And the biggest one right now is probably serviceability as a service, where it's just our attempt at saying to lenders that, hey, like serviceability is our bread and butter. Like we know that we've kind of done as much as we can almost in the broker space. There's not too many more brokers for us to, get on board. And we've looked around and we said, well, there's a lot of lender spreadsheets out there that still a pretty big headache to deal with. And we see a lot of lenders who are starting to transition. They're starting to digitize their spreadsheet into an online calculator. So it's early days, but we are working with, we're about to launch one lender's kind of digital calculator suite. And brokers are familiar with this. ANZ has one, First Mac has one, Suncorp has one. It's just now they're about to see the first Quickli version of that, where they can go into a lender's broker portal. And so they don't have to be a Quickli customer. It's just like, this is how the lender. But the beauty is our attempt is to standardize how serviceability calculators look and feel. Because if we've established kind of this new way of things, like, hey, this is a decent way of doing serviceability UI, and the user experience is pretty decent, then, you know, why shouldn't lenders just kind of do the same thing so that brokers don't have to find themselves relearning a new experience every time they jump into a new lender's calculator?
I think that's a great play. And, you know, when you reach a point of like saturation, obviously the idea is that the broker market continues to grow and you can continue to expand your market share there. But, you know, that seems like a natural progression. Lenders are not specialists at building tech. You know, they're not. And
you're not wrong.
Some of these companies, when I hear how big their engineering teams are, it freaks me out, because I'm like, we've like, at different points in time when we've been building technology, we've had like anywhere from 3 to 7 engineers. I don't even think we've ever had more than 7 in our product team. Right. And we put out like, I think, pretty good technology, you know? Yep. And if we ever need to lean on Ames Group or whatever for overflow for a specific project, we absolutely do. We leverage everything we can, because like it's a bootstrap fintech business. Like it's very expensive. And then I hear some of these companies have like, I won't say names because, you know, but like some of these companies that build tech, they have like 150 engineers, and like they really don't have much to show for it.
Yeah, it's wild, huh?
It's like, great, what do these people do? I think it's all the work from home, man. I don't know, but I'm like, fuck, if I had 100...
the politics, you know, the levels of management involved in all that.
Yeah, I think that's a big part of it. Like the decision-making process is too slow, and everyone gets analysis paralysis. And, but there's not a lot of clarity. There's not like one leader who's going, we're fucking building this next, and we're not looking at another single project. They get distracted by the, we're not looking at another project until this is finished. Yeah. A lot of people, like, they will take nibbles of all these different projects and realize they haven't really pushed anything really innovative in a while. Yeah.
It's interesting because we've actually watched how our team, our engineering team specifically, has grown. And it almost feels like production is slowed down, like what we've been able to put out there. And it's not because they're not good at their job. They're exceptional engineers. It's just more people means more opinions and more thoughts on how something should look and feel and how urgent it may or may not be. So in the early days, it was me, Angus, and somebody else, and nothing mattered more than speed. It was like, hey, you just put out the jankiest design ever. As long as it functions, just get it out there. Brokers are like, I love brokers because we don't actually have a problem with bad UI. Like, it can look like it's from 1995. As long as it functions and does the job fast, then we're happy.
Yeah, and the thing is, your competition in terms of user interface is the banks who have the worst
Yeah,
UI.
exactly. The bar's not been set very high. So we've just learned though that now we've got, you know, some world-class designers who, rightfully so, really care about making sure this stuff is phenomenal. It's kind of just slowed things down, but in a good way, in a healthy way. Because we've also been fixing a lot of bugs, and like our UI is inconsistent all over the app. So all I'm saying now is we have a sizable engineering team with proper product people and designer people and PMs, and the dynamics changed. You know, like the meetings are different, the speed is different, some of the stress is different, but we've also, I'll admit, because in case anyone in the team is listening to this, we've taken on a lot more projects as well. So almost to our detriment, we have like 6 things going that are major initiatives, like at any given time. We've deviated. We used to have that tunnel vision focus on things. Now we have like a fact find thing being built and a widgets thing being built and a serviceability for lenders thing that we're trying to do. And everyone's dabbling in AI. We're just figuring out what part of this we want to release to the market first, because we're all kind of, I don't know about you, but I have a certain level of fatigue when it comes to the new AI thing that the market's been releasing in the last year.
If I have to sit through one more expert on AI
exactly
talk about ChatGPT, I'm going to fucking lose it. And the reason is there's actually companies doing really great work in AI, and like not just LLMs, right? I'm talking about machine learning, deep learning, neural networks, like proper AI. I'm not disrespecting LLMs, but the most companies that say they're an AI company are just a ChatGPT wrapper or something. And it's frustrating because what it does is it actually takes away from the companies that are doing real AI, real ML, like real deep learning, real neural networks. And LLMs are one segment of deep learning, but it's not the only thing that's AI.
Right.
And these experts come up on these different industry events and they'll tell you that, it should write all your content for you and it should do all this stuff for you. And that's great, but that doesn't, I don't think that helps brokers because they're already seeing that. Yeah. You know?
And that stuff is just not reliable enough for you to really use and create the kind of efficiency that the kind of world's preaching you get from AI right now. I think
there's one that got up and showed this tool that was could clone you and like do an interview or with a client, and like they were showing him like, look how amazing this is, and like, and the mouth was not moving at the same time as the audio. I'm like, if you sent that to a client, they will never return your call again because they'll be like, this is a scam. Yeah. Like there's tools, and we try so many different tools in our business, and most of them are crap. Like, and it doesn't mean they'll be crap forever. And we'll happily revisit them, but
it all just feels pretty gimmicky right now.
A lot of gimmicky.
That's what we've been actively trying to avoid because one, we didn't need to pivot into doing some new special AI thing. So we've just tried to be patient with, what we release to the broker audience. And now we've finally found something that it's really small, but we think there's a novel use case behind it that you're not reliant on, or you're not kind of at the mercy of an LLM's unreliability.
Yeah.
Right? Like you so often are in other things. So
well, we solved a real big problem with our Ask ALO product. Ask ALO is a policy, and this is one of the LLM use cases that we have. But it's one that we don't promote a lot because we're like, we don't want to be known as an LLM AI company. We want to be known as an AI company. But it's a really useful tool. So we have 90 lenders and bank for asset finance anyway. We have all of their policies loaded in. But we've spent like more than 2 years developing that product before we went to market because everything before then, all the versions of it previously had hallucination, had all these things. And we were looking at like RAG architecture, and then we tried all these other, there's obviously vector databases, but there's also graph databases and all these other things that can do entity resolution better. And we eventually have gone down a different architecture and it's way better. And it doesn't cause hallucination, basically. It can't hallucinate. And so we end up with a much better finished product because now someone can run a scenario for asset finance and say, hey, I've got a client who's 25 years old, wants to buy a luxury car, credit score is this, blah, blah, blah. Like give the details and it will spit out a response. and it'll give you the TLDR version, like the
Yeah.
summarized version of like, go here because of XYZ reason.
Yeah.
But then it'll also give you all the reasoning
Good.
for all the other lenders. And so we think that's a valid use case.
Definitely.
And we've already got users on that product. And
Awesome.
we just launched it, but we had some pilot users on it. And we'll continue to enhance that. But it has other use cases. Like, it's not like that architecture doesn't have to just be used for asset finance. It has many other use cases. But that was something that took us ages, man. And we fumbled with that product so much because every time we think we were getting there, like you'd just be a victim of like token limits or like whatever it is, you know.
It's there's been so much maturing in the AI technology over the last 2 years that, I mean, I think it's a relief that we didn't rush to market with something because it would not have been a good outcome.
Yeah, and that's what we were concerned with.
Yeah.
It's like if you call yourself an AI company and you put out something and it's terrible, it's like, are you really doing AI or are you? So we rather be patient. We rather test and make sure that if our brokers find it useful, there's a good chance others do. And that's one of the reasons why I think we've done well is because like we have like the most ruthless brokers in terms of criticizing products. And sometimes I worry that like they might upset the developers or the engineers. But they all seem to like it. They're like, nah, if it's not useful, why the fuck are we doing it? You know, and I think you need to have that ruthless approach. It doesn't matter what we build something, and if brokers aren't using it, well, then it's not useful.
Yeah,
but if you see brokers log in and using it every single day, you're like, fuck, this is useful.
I love how fast brokers are to give you their opinion on the amount of times like we've been emailed with they think we're doing something, and they're just like, basically it's their way of saying stay in your lane. Like, what are you guys doing? You know, it's just like. It's like, thanks. We didn't ask, but thanks.
Thanks for the heads up. But yeah, it's look, I love the fact that people are trying things. I love the fact that like, you know, these technologies, they're for everybody. They're not, you can't just like, oh, no one's allowed to try. No, everybody should be trying these technologies. I just think we need to be careful who we put on a pedestal as far as like who the experts really are. Yeah. And having somebody who was 2 years ago a blockchain expert and 2 years before that, you know, some other kind of expert. These people are snake oil people. That's what they are. Before that was social media. There was social media experts, and then they became, the same people became blockchain experts, and now the same people are AI experts. I would much rather put, and the problem is, one of the reasons why these people take the limelight is because, and I mean this with the most amount of respect possible, guys like Nilep, guys like Angus, guys like, they're not them. They don't put themselves out there enough. They don't want the limelight. They're happy just being like writing code and building cool shit. But I feel like we have a responsibility to elevate those kinds of people that are actually building cool shit and know how to build cool shit and know how to solve these problems, not the snake oil people. So anyway, I'm trying my best not to disrespect people, but sometimes it's like, it's frustrating because like we have great technology companies in our industry. We really do. Yeah. These are the guys that should be doing the talks, the guys and girls that should be doing the talks. If you go and look at some of the people that were finalists in AI awards, you're like, what AI did you build? As far as I'm aware, I don't think anything. But
that's kind of what kind of made us stay at arm's length from some of that, because it was like, oh, that's not our style, you know? Like, But
anyway, but no, it's really good to see all the progress that you guys have made, and you guys continue to innovate in like sort of reinventing yourself, whether it's, you know, aiming the direction at helping lenders, because ultimately that helps brokers too. If they have a consistent experience, even people who don't want to subscribe to Quickli, you've got to log into a lender's portal and use the Quickli powered. Doesn't matter if it's First Mac or any one of these lenders, right? I think there's a lot of merit in that.
Yeah. Hopefully, we brought on a head of partnerships and a head of sales to drive these initiatives. Angus and I knew we definitely should not be the ones driving these initiatives. We needed some heavy hitters. So these two, Jen and Darren, they're weapons in their own right, coming from PropTrack, CoreLogic, and Lendy Aussie. So they know that arena way better than we do. And we kind of just said like, hey, here's the mission, like run with it. You know, let's just see what you can do with get lenders on board. And look, maybe there's a day where we dabble in consumer land. where I think you know this, we've spoken about it a little bit, but like we are inadvertently getting consumers using Quickli.
Yeah.
Right. We don't do marketing and paid ads. Like, there's no reason for consumers to know about us. And we are definitely purpose built for brokers. Like, I mean, this is a pretty complicated tool for consumers to use, and it certainly doesn't look pretty enough for the average consumer. But yeah, they're finding us, and we're kind of, well, we're not ignoring that. It's like, well, is there something here? Like, we can't stop consumers from starting a free trial, and they're learning something, obviously. Like, no one's paying, don't get me wrong, no one's paying for a subscription at Quickli, but there's probably a few hundred consumers a month finding us organically. So I think we get mentioned in Facebook comments, or we get mentioned in property chat, and I mean, there's probably a lot of forums that we don't know about. Brokers are sharing screens, so maybe clients are seeing it that way. But point is like customers are interested in learning about their borrowing capacity, and rightfully so. Like, especially the younger generation, they want to Google everything, they want to learn everything themselves before they go and speak to a so-called professional. Like, maybe there's a healthy amount of skepticism there that even a human needs to get involved. So it makes sense that people are finding us, and they're like, our platform's not that hard to use, so I suspect that they are getting some value out of plugging in a few quick numbers. But point is like, we're not trying to tap into that. We don't really know what the play is there, what we're going to do, but you know, it's not lost on us that there is something we can do to facilitate getting those consumers into the hands of brokers. Yeah. So we have no interest in, I mean, for the record, no interest in being an aggregator, no interest in being a brokerage.
Yeah.
But
it's crazy that you even have to say that, because like I feel like you know me, I'll say whatever the fuck I want, and some people get upset, but like there's a thing that our industry has, and it's like talking about creating a submission protocol to lenders is like the cartel will come after you, right?
You're not wrong, man.
Yeah, talking about you know, tools that help brokers, the aggregators, like
that's our territory.
They like are very, very aggressive with their approach to potentially partnering with you. Yeah. We see it even in loan options. Like, you're building all this tech, and like, what's the play? And like, you trying to take mortgage broker data, and you're trying to like, no, we're a business. We're trying to like create healthy partnerships with mortgage brokers, because the asset finance referrals we get from them are very high quality. They're very valuable partners to work with. And when someone said, and I think it's because sometimes people sell out too, right? And so they're rightly skeptical, because not everybody has a principled approach. If I say we're never going to do home loans as LoanOptions.ai, we are never going to do home loans. And it's as simple as that. Why would we self-destruct our business and make every mortgage broker that has trusted us not trust us because we think we're better at mortgages? We stay in our lane. Right. Like, we're very good at asset finance, and I reckon we're the best. And that's a biased view, but that's okay. I'm allowed to be biased. I own the company. But you know, to think that we could just step into mortgages and all of a sudden be excellent at it is so naive. It's the same reason, same thing, the same approach that we present to mortgage brokers in our pitch is like, you're an expert at residential lending. Don't try and be a jack of all trades. Be an expert at residential lending. Trust me, we're better at asset finance than you can ever be. Yeah. It's the same thing. Why would we ever think that the reverse is true, that we could be as good at residential lending? But so aggregators skeptical, and then you know, all of a sudden they're like, you've created enemies for no reason. I'm like, hey, I want to work with you guys. Like, it's like, well, you know, like they're just, like, I use the word, and I'm not, it's probably bad to say cartel, but like it's kind of that way, right? It's, unfortunately, they create enemies, and you find out that this person was like, oh no, we won't deal with them. And like, why? I've never even had a conversation with you. I don't know where this animosity is coming from, but
that's funny, man. Yeah, we've had maybe only a little bit of that. I don't think to the degree that perhaps you had. I mean, you've got a longer history of integrations with aggregators. They've simply just not shown much interest in integrating with us, and you know, we haven't pursued it. They haven't really pursued it. There's been a couple, and you know, hats off to those guys. It's been awesome, but not everyone. But we just haven't pursued them. And man, honestly, we're kind of lucky that
you haven't had to.
We haven't had. Well, in the early days, I won't say who, but like there was a well, a quality conversation happening with one that was showing promise. And had they been willing, we would have struck a deal that we definitely would have regretted 4 years later. You know what I mean? Because of the way things panned out.
Exclusivity, yeah.
Right, something like that.
Here's the other thing that aggregators need to stop doing, in my opinion. We're agnostic, right? If an aggregator approached us and said, we'll integrate with you, but we want a few of your lenders on the asset finance side to aggregate underneath you, I'd be open to that kind of conversation. But the first thing they jump for is like, we want exclusivity on the tech.
Yeah.
Like, in order for me to give you exclusivity, that number needs to be fucking huge. Like, I'm just being very honest. That needs to be a very big check, probably too big.
I don't think
because I don't think it's worthwhile. Like, as a tech business, to create enterprise value, you need a massive TAM. You need a total addressable market needs to be massive. If you give exclusivity to an aggregator, our industry is already so
I was about to
niche.
say, it's not like we have a huge TAM to begin with.
Yeah, it's like mortgage brokers. On the high side, there's 21,000.
Yeah.
The realistic side, I think a more accurate number would be however many users you have, that's how many mortgage brokers there are that are actually real brokers. The rest of them are transacting once a year, maybe twice a year, and that's it. And they're not. That's not a mortgage broker. That's
well, you heard this stat a while ago. I think 30% are like dormant accredited brokers or something. So
haven't transacted. And like sometimes there's an accountant that. Like I think Aidan Hartley, he's a funny guy. He put on his thing and on his LinkedIn, he's always got funny posts. He's got these like lightning bolts. This accountant was like accountant, financial planner, mortgage broker. Like he had like
just
10
roasting
10
this
jobs.
guy.
And there was lightning bolts after everyone. It's like so much lightning, and I was just pissing myself laughing. But there's a lot of that. There's a lot of mortgage brokers that are accountants that have tried to dabble or like try to help a client here and there, and they just think it's helpful to have the accreditations because if you can forget about the money, if you can help a client and make them more sticky with you,
it makes good business sense.
It makes good business sense. So, but I think if you look at the number of Quickli users, I think that's probably the most accurate representation of how many active career brokers there are. The rest of it are part-time lifestyle brokers, whatever you want to call it. And so if you think about how many brokers there are, and they want us to restrict it to the largest aggregator has what? 5,000
LMG
brokers, LMG. And most of them have a lot less than that. So but let's assume that's the largest one. So you want to take a TAM that's 12,000 people and reduce it to 5,000. Well, TAM that's 20,000, reduce it to 5,000. But we already know that the TAM of
so that would mean that they would need to 4x whatever that original agreement was that was not exclusive. Say, hey, we're going to quadruple that if you're going to take away 75% of my TAM. Which they won't do.
So aggregators, my point is aggregators need to stop doing that. They need to work with all the tech companies, in my opinion, and make it a seamless, like the first aggregator to say, you know what, we're not a tech company. We've got this platform and it does everything we need. But we're going to bolt in all the other best services is actually going to be the most successful aggregator.
I think so too.
My view. And the reason for that is imagine a fully integrated solution that, they can have a Quickli journey that like can do the borrowing, serviceability, do all this stuff, collect, fact find, do all the stuff that you guys currently do and want to do. And then let it be complemented by whatever it is. It doesn't matter what other service. It might be Sherlock, it might be Hound, it might be all these other plugins. Just like imagine what a fully integrated with all the best tech platforms out there, document collection, like all these things that are out there. Not even loan options. Forget about our business for a second. Imagine how good that journey and experience would be for a broker.
100%. And that's what that's the argument we would make. I mean, we don't argue, but that's the conversation we're having is it doesn't seem that they realize that just the mutual customer of ours, this broker, like we both should want what's best for them. The best possible outcome for them is a win for both of us. But you can get a sense that they don't really see it that way. It's really about exclusivity, dollars, what's in it for me. It's like, well, hold on. Like this integration really just benefits the broker, right? Like let's just make this a win for them. And let's not worry about all the other aggressive kind of negotiation or exclusivity or commercial pieces that are attached to that. So we haven't pursued those. So, and fortunately, like it's not bit us yet, but we're in a point now where it probably is important that we consider aggregator partnerships more legitimately. But it's also the case where some have made it quite clear they're not interested.
Yeah, that's strange. That's strange. It's like literally every single one of their active brokers would be using it. To think that they couldn't spend a little bit of their roadmap and allocate 1 or 2 engineers to integrate properly is just bonkers. Like that's the point I was making before about they're not in the best position to be building technology because they're too far away from the problem.
Yeah.
When's the last time an aggregator ran serviceability on a client? It doesn't happen, right?
Yeah.
So if the broker's the one that's actually doing these, and maybe you've got, there's probably some aggregator BDMs that help their brokers and help place deals and stuff like that. So I'm not discounting the work they do. Yeah. I'm just talking about as a business in general, their core offering is not running serviceability and scenarios for. Yeah.
Well, and I sympathize with aggregators. They're doing a lot more than what we're doing. Like they've got 1,000 things on their plate on any given moment that we just don't relate to. So with compliance and ASIC and ACLs and all of the other stakeholders and I think the role they play is so significant that they hear from brokers more than perhaps we do. Like we're very much kind of that new age tech where it's maybe a lean kind of support service where, I mean, we don't even have an O2 number. Like sometimes I feel bad about that, but no one's calling us, they call maybe like our customer success guy. Cause they get a hold of his mobile number. But point is it does feel easier for us. So I sympathize with aggregators. They got a lot more that they've got to deal with than we do.
And it's not we both know it's not an aggregator bashing session. It's definitely not that. It's just, it's hard to get them to see that they're like, if they were to, take away some of the time that they spend building some of this stuff that their brokers hate, how many aggregators have tried to build CRMs, spent millions and millions of dollars, and then ended up scrapping that? Like that is like the most common story ever. Yeah. If they understand the role they play and the service they provide and stuff like that, I feel like they'd be better positioned if they just integrate with whatever tools are already available instead of trying to build their own version of Quickli. How many stories have we heard? And then people go, my aggregator's building, Quickli, we're gonna have it fully integrated, and then like they use it for one day and go, oh, this is so wrong, and then they go back to Quickli. It's just would have been way easier. But yeah, again, not trying to bash them. I just think that there's where I think we're both on the same page that we would be more than open to discussing that those sort of partnerships with them, and any way really that we could take some of this stuff off their plate really, and let them focus on their core business, which is acquiring new brokers, expanding market share, compliance, the regulatory side, and advocating for brokers and the broker industry. Professional development, like these are where brokers actually see value in aggregation, compliance support. If the broker's going to be away and they need to sort of have somebody hold the fort while they're away. I know some aggregators offer support services like that. Like they expand that.
Yeah, that makes a lot of sense.
Yeah. But outside of golf, what else?
Outside of golf.
Outside of golf, what do you do? What keeps you busy?
It's funny. We have this joke that I almost hate the cliche serial entrepreneur. Yeah. But like. My wife would say that you're addicted to planning and scheming. Like she'll say that to me all the time because it just, no matter how busy I am with Quickli, like I'll rattle off like, hey, someone should do this. Like, and then she knows what I mean is like I'm actually heavily considering doing that in the back of my mind.
And that someone sounds like Eric Dill.
and so we talk about. One day in the far future, when perhaps we're moving on, closing the chapter of Quickli and whatever we do, I look at like what could come after that. And man, I was telling her like, I just want to reset. I just want to shut it down. Like I'm not like, I know I might think of ideas and want to plan and scheme things all the time, but I'm reaching a season now after what feels like an entire 37 years of planning and scheming ideas. like I'm well and truly ready to shut it down and just be like, all right, I want to go into full dad mode. I want to check out mentally. I want to stop worrying about staff and businesses and ROI and partnerships and just see what life would be like. So we entertain the idea of what, because like being in the US working these hours, it's not sustainable.
Yeah.
So we think about what post Quickli life would look like, in years to come. So for that reason, all I'm getting at is like hobbies are becoming a thing, like whatever, like, cause I don't make time for hobbies. Like for the last 12 years of being in Sydney, it's just been a 7-day-a-week grind because when I was starting the mortgage broker business, I also started a juice bar kind of cafe thing at Maroubra Beach. And my poor wife, I got her to work there full time because I was making like a salary, I guess, just because that was high risk. Who knows how that juice bar is going to start out. So I would work weekends with her. So for as long as I can remember, it's just been like one thing after another. And we're just reaching a point where it's like, we actually got to start having fun, don't we? We got to look for things. So this is why I was very intentional about starting golf. I got a few buddies who play. They're really good. You know how it is. Competition, motivation. Banter. I'm not going to let them do better than me. I got to get good. I got to get good fast. But no, outside of that, like my wife is Swiss, so I love the idea of our kids doing more skiing and snowboarding. So we're going to try and be more intentional about trips to the snow, trips to the Alps, and Switzerland. So a little bit more of that, hopefully. Surfing, I don't do much of it. I don't live near the water, but like we did a week kind of trip to Cancun and just spent a week doing surf lessons, and that was phenomenal. And it seems like you're similar, but like you introduced me to a sport that I'm not terrible at, and all of a sudden I'm like, nah, I got to get very good at this. I'm not content if I'm just average. So there's an element that, like any of these sports, like any board sport could be something that I'd want to spend a lot more time doing. But yeah, golf is definitely number one. They joke as well that I started running a lot more, thinking I'd get into endurance races. That's never happened. I've never done an endurance race, so it's a running joke. It's a running joke. It's like, hey, remember that time you thought you were going to be like an endurance athlete? It's like, hey, I'm still in. Hold on. That's still the plan. Yeah. It's just slow.
Running is particularly hard for me because I used to play rugby league and I've worn out like all the cartilage in my knees. It's terrible. I got like grade 3 fissuring of the cartilage in my knees and dislocated one knee, torn MCL in the other. Like running is so hard on my knees. So I've got like really good shoes now. And when I go to the gym, my EP, he makes me do running to start the day, to start the session. And the other day he was like, today we're not doing running. And I was like, sweet. And he's like, no, we're doing the assault bike. And I was like, fuck. I'd probably rather running. But at least the assault bike I got off and my knees weren't hurting. Like your quads and everything is like all, super tight and filled with blood and heavy and all that lactic acid and whatever. But it's so much easier on the knees. So I could never be an endurance runner. I just have to... for me, like golf is like I play every week and then I train jiu-jitsu a few times a week. And that was like the first real love. Like I started training jiu-jitsu 5 years ago. I was like, played sport all my life and then got married and stuff and like just totally neglected fitness and health. Yeah. And then when I started, when we had my daughter, I was like, I need to do something. I was like, dad bod galore. Yeah,
that was it for me. Same exact thing.
And the one thing I realized when I started jiu-jitsu is how important being a beginner at something is. So like, it's because martial arts analogy, I say like, you should always be a white belt at something. And golf was the next thing for me because it was like this thing that like, you realize how crap you are at something. Yeah. And then in the early days, you see the incredible level of progress that you make in your first time ever swinging a golf club. Like if you're making contact with the ball, you're doing a good job. It's like a lot of people will just have like 5 air swings for one solid contact, It's like,
and you really only need that one good hole in 18 or even good shot. To just make it all worthwhile. I know. Like the whole day can suck.
You could be eating shit for the first 17 holes and just hating life. Yeah. And then on hole 18, you're like, stick the green from 150 meters out. You're like, what is this game?
And all golf etiquette goes out the window and you're jumping up, shouting, and then you're hooked again. You're right back loving it.
like that is just. I'm going to be careful what I say because people are going to think I'm a heroin junkie. But I've never tried any drugs, not just heroin, any drugs. But I imagine when you first hit the green from 150 meters out or something like that, that's probably about as good as heroin feels.
That dopamine hit.
Yeah.
I mean, I think, there's so much to golf that it's like, I honestly think it's probably good for the brain, good for physical exercise, all that stuff. But just getting out and like getting fresh air. It's, for me, I probably can't overstate like
how good that is.
I mean, I was so kind of secluded into this work office desk mindset that like to finally just get out and like you said, not have my phone on me. Here's a funny story. This is how bad I am at golf. My watch must have thought I fell like an old man, because it did that panic mode where it alerts my emergency contacts.
Yeah, wow.
And I didn't notice. And I started getting a call or a message from my brother and my wife at the same time saying, "Are you okay?" And I'm like, "What are you talking about?" And I looked down and I see my watch is just buzzing. And it's all because of how bad my swing was in that moment. I've never had that happen before, but it was definitely a bad golf swing that triggered it.
About that. Not a lot of people would repeat that story.
Man, yeah. It's because I know I'm on a journey of progress. Like I can admit that I'm terrible now. If I don't let's talk again next year and see if I've improved. I might have hung it up. Yeah, if I don't get any better anytime soon, then I may not last.
It's one of those sports where you will take 3 steps forward and then 5 backwards and then 10 steps forwards and 3 back, and it's like it's the least linear progress you'll ever see in any sport or any endeavor, 100%. In my opinion. Anything I've ever tried to be good at, nothing's quite like golf. But
because every basketball court's the same. You're bouncing the ball the same. The goal's pretty much the same. But any course you play at in golf,
and every single lie will be different.
So different. The greens are wildly different with the speed. I don't know. Yeah,
it's great. I think,
it is great.
Anyone who hasn't tried it, firstly go to the driving range, because I'll tell you another thing that kills me about golf is there'll be some dudes that will be in front of you on a Sunday morning, and instead of it being a 3 or 4 hour round, it ends up being a 6 hour round, because like just being behind them like literally ruins your day, because it's like.
Does it get crowded like that out here on weekdays?
Weekdays no. Weekdays no. But if you're trying to play Sunday morning, which is pretty much the only time I can play, I'll get up at we'll be at the course teeing off on the first tee time 6 a.m. or something.
Right.
And that's because during the week is so hard, man. Like I can't really dedicate 4 hours during a business. It's hard. It's not impossible, but it's hard. And your phone's still ringing, and so you don't enjoy golf as much if your phone's ringing and it's like everyone calling you, and you got things to do and emails to respond to, and all that. You just can't enjoy it as much. On a Sunday morning at 6 a.m., that's the most at peace you'll ever get. My phone. But people in front of me, they'll play at that time, which is peak time. Like weekends are peak time for golf, and they have no idea how to hit a golf ball. I feel like I never went to the golf course and played first. Yeah. The way I started playing was driving range. Yeah. And then when I thought I was good enough, I'd play short courses like the par 3 at Terry Hills or the par 3 at Sefton. And then I would play golf, but I would play Twilight or something where during the week it's not that busy. Yeah. And then when I thought, okay, I can at least hit the ball every time I swing at it now, and all right, I might be getting
which is a legitimate milestone.
Yeah. Then I started playing on weekends. Like before that, I feel like people should probably spend a bit more time at the range. I'm not trying to discourage people from playing golf, but probably let people through if you're not that good as well,
Yeah, this is a PSA. If you're one of the slow ones, just let us through.
Oh, because we had, not last weekend, the weekend before we played, there was a group in front of us that, it was real bad. 4 or 5 air swings before they would hit the ball, and then they would hit it 5 meters or something, just totally top it.
Get off the course.
Miss it. And then we just politely, because we were just up there bum every single hole. We're like, oh, you want us to play through? We don't want to rush you. It looks like you're having a good time or whatever. No, we're doing everything we can. We're not being slow or whatever. And then as they were saying that, the guy had 4 or 5 air swings, and then eventually hit it, but it went 5 meters. And I just went, are you sure? And they're like, all right, go. And I was like, yeah,
Wow.
I thought so.
So it wasn't even like they were being held up by somebody in front of them?
No, in fact,
Unreal.
they were so slow that there was like 2 full holes gap between them. Because like there's a thing called pace of play,
Yeah,
right?
100%.
And the club, it ruins everyone's day.
Yeah.
Because if we're slow, then people are up us and then the people behind them, it creates this bottleneck.
Yeah.
And we're like, if we just like literally hit off at the same time as you, we're going to finish the hole like really fast.
Yeah.
And then the people behind us like aren't going to be behind us anymore. They'll be behind you, and they can probably skip you in a couple of holes when they're caught up to you as well. But when there's a big gap like that, it slows the whole pace of play down. But
See, I wouldn't know about playing on a Sunday morning. That's the only time I don't play because I know the crowds are there.
Yeah,
I get my Monday to Friday time. You should move to America.
Man,
Work the night shift, get your whole days for golf.
Yeah, I'm thinking about it. Because, one of the things that we're doing this year is we got accepted into a fintech to the USA New South Wales government program. Now, I'm not going to make that sound like we did anything super special, or they probably just let anybody into that program.
Come on,
but
you're special. Come on.
But we got accepted into this program, and it's basically just like a few months where leading up to New York FinTech Week, they coach you, put you in front of the right people as far as incorporating and the proper structures there. If you've got an Australian parent company, and like it's been pretty good so far. Connect you with potential partners and potential VCs, and like, it's pretty good. If you've got no contacts in the US, this is better than starting from zero. So we got accepted into that, and I've been on that. And in just after Easter, actually, I need to fly out on Easter, so that's a different thing. My wife's not going to be happy about, but.
Did she just find out? Did you just tell her over this podcast that you're going to be flying?
Yeah, pretty much. So anyway, I'll just double check the date, but I'm pretty sure I have to fly out on Easter Sunday. So I'll make sure Easter Saturday night we celebrate. And so when I go over there, if we can successfully get some partnerships, then by 2026 or before, we'll probably look to launch there purely as a tech play. We're not going to try and be a broker over there, because 50 different states is like 50 different countries, and they all have different regulations. It's a different ball game.
Yeah.
But depending on how that goes, there's a real chance that I'll maybe not live there permanently, but I'll spend some time there for sure.
Nice.
So,
are you eyeballing a certain city?
I like Texas or Florida, just no state tax or whatever. A lot of people say you should incorporate in Delaware, but I think just where I would live would be probably Texas or Florida,
right.
and that's just
Austin.
Yeah,
that's where everyone's at.
Yeah,
everyone.
Yeah. And I just think I could probably get behind that lifestyle a bit more than the sort of pretentiousness of LA maybe and that kind of stuff.
I respect that.
Yeah. It's not for me. No disrespect to people who like that lifestyle, but it's not for me. It kind of seems very similar to the Eastern Suburbs lifestyle here, and that's cool. And like I love visiting, but it's not for me. Everything is.
I'd say it's worse than the Eastern Suburbs lifestyle.
Wow.
I mean, I'm a big fan of the Eastern Suburbs. Like, it feels way more down to earth in many respects than what I've seen out west on the West Coast.
Yeah. And so I'm from very humble beginnings, so all of that is very. It's very uncomfortable for me, because everyone's like, what car do you drive? What street do you live in? Like, man, I'm happy. I got a roof over my head.
We'll welcome you in the South. Yeah,
sweet.
Yeah, the dirty South will take you. Yeah.
Yeah. But man, look, it's been absolutely such a pleasure just knowing you guys, and I hope we get to bounce into each other at some of these events this year. And I'm sure we'll see more of each other. But we got to, next time you're in Sydney, you got to let me know. We'll play golf.
Yeah, for sure.
And one of the traditions we have on this podcast is that before we wrap up, you've got to give me your best 60-second pitch on why, and you can choose quickly or promptly or both, but why should your ideal customer use Quickli, which in this
ideal customer.
Yeah, which would probably be mortgage brokers, right?
Yeah, for sure.
If you're a mortgage broker and you haven't signed up to Quickli, which is probably zero of them anyway.
Yeah.
Why would they pick? Or maybe you want to pitch promptly.
Man, no, look, promptly's fine. Promptly will take care of itself. Quickli, though, is the exciting bit for me because it was like a passion project, right? So that was where it was like, yeah, this is a problem that can be solved. Any broker, let's pitch it to the new to industry brokers, right? Who may not have heard about the tech yet. So I almost want some of the new to industry brokers to suffer a little bit. So let's say they're 6 months into the role, they don't know about Quickli, but they've been suffering through spreadsheets for a while. The pitch to them is you can throw all those spreadsheets in the bin. You'll never have to open those up ever again if you don't want to. Yeah, you jump into Quickli, we aggregate 40, 45, I think, I don't know what number we're up to, different lender serviceability calculators into one interface. So you put in the numbers one time and it spits out 40 plus results instantly. There's a lot of policy baked into that logic, so you don't have to worry about researching all the little tricky areas of policy. A lot of that's baked into the results already, and we'll make you aware of what we've baked in so you're not out of the loop. But yeah, the time saving is whatever time you spend on one calculator, multiply that by the number of calculators you would fill out per deal, and then that's the amount of time we just saved you by signing up for $40 a month.
That's crazy. $40 a month. Sign up, you tight asses. No, thank you so much, man. This
has been awesome. Thanks so much, Julian.
I absolutely loved it. Always a pleasure to catch up with you.
Yeah, definitely.
Mate, and I've appreciated the camaraderie and the friendship and the support because a lot of people ask us actually just before we wrap up, like, oh, so like, is this like Quickli, like when we explain the loan options asset finance product? And I'm always like, no, not really. So Quickli is a product that's for mortgages and sort of that's not our area of expertise. This is a product that does loan matching and does serviceability as well, but it does it for asset finance specifically. But that's always interesting because anytime people now associate lender results,
right,
and
yeah,
like they've associated, you've kind of created this other brand recognition.
Right.
Anytime you see an aggregated result of different lender logos,
yeah,
like, oh, like Quickli.
That's so funny. We had no idea, man. Jeez, we did not expect this.
Well, I think it's well deserved. So congrats on all the success. Looking forward to watching you guys continue to shoot. And I'm sure we'll be seeing more of your product releases this year.
Likewise, yeah. What you guys have done recently has been awesome. We didn't get to talk about it too much, but and I keep a close eye on it, even though I haven't been able to play with the tech yet. An exclusive demo by yourself would be cool.
We'll do that now.
But yeah, it looks like you guys are doing some awesome stuff too. So, and honestly, I'm pumped. It's not a zero-sum game. I think people get that wrong. Like, it's not a zero-sum game. So there's so much in it. Even if there is overlap, it doesn't matter to us. Like, we just love watching other people like you do in the same sphere that we're in, do awesome stuff, and then spitball, talk about the wins and losses and the war stories and, you know, poke and fun. Yeah, all of that. It's just a lot of fun. So yeah, we're glad to be a part of it.
Thank you, man. I appreciate you taking the time to do this and flying halfway across the world. Appreciate it.
Anything for you, man.
Happy Valentine's Day,
bro. Likewise, bro.